Hey traders, welcome to Charts and Coffee Christmas Eve edition. Yes, we're going to have a shortened trading day, half day. We've already seen how the volatility and the volume is contracting, and this is going to be the way it's going to be for the next, going into next week and going into the new year. In fact, for the most part, the question might be, when does the market, when do things wake back up again? And chances are it won't really officially be till the 6th of January. However, we will have, let's jump on over here. Let's go to the first week of the new year, which is going to start on Wednesday. And if you take a peek, scroll, January 3, we have ISM manufacturing PMI. So you might say, Rog, first Friday of the month. Is it non-farm payroll? And if we take a look at what we've got going into January, no, actually, if we scroll down to Friday the 10th, right? So really, in terms of attention, in terms of data that's going to have a fairly decent bearing on what the Federal Reserve may or may not do. Right now, it's still looking like a hold for January 29. That NFP is going to be the second Friday of the month. So that's one way, and that's one reason I would look at, why would people be compelled to come back next week on the first, second, or third? And they might, but really we would expect everything to get started on the 6th of January. All right, so that's where we are in terms of preparing for, what is the inevitable kind of quiet and slow down, and then what that non-farm payroll may mean to this meeting. Now, for those of you that are wondering, yeah, Rog, what are we looking for in terms of that meeting's impact? So right now, because we're back to waiting for the Federal Reserve to cut rates, we're back to good news is bearish, bad news is bullish. And where are my drawing tools? I don't see them. So that's where we're at right now. And ultimately what that's going to mean, where are my drawing tools? Let's see. So what we're going to be back to, there they are. All right. So what we're going to be back to now is, if NFP were to be a miss, right? Whatever the number is, we're less than. This likelihood for the hold, by the way, this is the hold column, would start to spill over into the cut column. This is the quarter point cut column. Mainly because there's two reasons the Federal Reserve might be compelled to change rates. One is the rate hike side. That's if inflation increases. But if it stays pretty steady, no reason for them to do anything. The flip side is, what if their lack of accommodative monetary policy starts to affect employment, starts to affect their dual mandate, which is inflation and jobs. So if it starts to affect employment, it puts basically pressure on them to cut again. So really anything that's going to be in the job category, non-farm payroll, jolts, I would say to a lesser degree, initial claims, but we'll keep an eye on these. And that's when all of that fun starts as we go into the new year. So a lot of times the question that I get for this time of year is, Rog, what do you do this time of year? I don't like to be away from the charts at all. Even when I travel, I take a laptop, I flank it by two thin mobile monitors, and I can take the market with me anywhere. Never understood going on vacation and shutting the market down, because we can take it with us. And the reason I like to, at least once a day, even if just for 20 or 30 minutes, I want to scan things, because getting rusty is real, right? Losing the pulse of this soap opera we call the market is real. I don't want anyone to feel compelled that they have to look at it. But even if just for 5 minutes, take a look at the broader averages. Maybe take a look at, some of the basic high concentration weighted stocks. You can take a look at maybe 20 stocks and know, for the most part, what's happening not only at the index level, but the sector level. That could take less than 10 minutes. And you just never find yourself playing catch up to the narrative. And I'm a big fan of that. So what do you do these next couple of weeks? Am I going to be active trading? I really spent the last, say, 2 decades with just keeping the pulse, but not putting on any significant trades. And when it comes to the election year, all right, when it comes, and it saddens me to not be able to trade actively into the end of the year, because oftentimes it's so great. So why isn't this end of year as clearly bullish as oftentimes previous years have been? And it has a lot to do with the election cycle and the reaction in November to the election and the rally we saw in November, and now here in December. Could we say some of the performance chase basically happened about 3 or 4 weeks early than normal? Yeah, we could definitely say that. But even with Powell basically punching the market in the mouth last Wednesday on the 18th, you can see we're already coming up off that, because let's keep this in mind. The monetary policy is not the only reason that equities are up. It's a really compelling reason and probably a hugely influential reason, but it's not the only reason equities are up, that the indices are up. And not all the indices are up in the same way. You can see the NASDAQ is definitely the strongest, because when you look under the hood of the NASDAQ, you see that tech is strong. You see that consumer discretionary is strong. You see communications are strong. Semiconductors, it's kind of a one-trick pony with AVGO right now. And so that's where you look at 3 out of the 4 cylinders of the NASDAQ, they're firing off. Financials had a great November. They've had a pretty lousy December. Healthcare has had a lousy 2024, right? So one of the things I was mentioning to members yesterday, and I don't have the notes up, but I wanted to share with you all some of the things I was sharing with members. One, we're still looking at portfolio opportunities. So when that weakness came on Wednesday, do yourself a favor, make a beeline for the daily, if not the weekly time frame, and look at those wish list numbers, right? Look at those wish list numbers to look at where you're saying, hey, there's an opportunity to buy this with a time horizon that isn't between now and January, or between now and February. It's between now and maybe 2026. Right? So those longer term weekly time frame opportunities oftentimes come in the form of this massive sell-off, markets in turmoil type day. So use that as the blue light special. Use that as the Prime Day, the Black Friday sales. Use that as an opportunity to build that longer term portfolio. When those type of pullbacks come, maybe one of those wish list prices is happening. Right. So those are all things we can do so far here in January. And then probably the most important thing, let me see if I can't bring this up here. One of the most important things, I don't have it up right now, but is to, and I'm going to read this from my other notes here. So I was doing a quick 2024 overview, just generally speaking about the year. And then as we go into January, if you've been wondering, Rog, how did you do in the Sector Secrets Mastery? What are the last 6 months? What do they look like? How did October, November, December go? By the way, all 3 were positive months. October was good. November was absolutely great. And December is probably, of those 3, the most lackluster. A lot of folks said, Rog, did you have a losing month this year? Yeah, in April, I was down 11.6%. I was actually looking at the notes right now. So April was the only losing month. May was pretty flat, but not a losing month. Q2, when I look back at the year, even though the year isn't done yet, but Q2 was the worst quarter. What about the best quarters? January and November were my highest performing months. And it makes sense why January was such a high performing month, because at that point, there was even some expectation at the beginning of this year that the Federal Reserve could cut in March. And that kept Q1 as probably one of the best quarters since 2020 in terms of straight up trends that continued and persisted. So Q2 was the best quarter. Q2 was the worst quarter. Q1 was the best quarter. April was the worst month. January and November were the 2 best months. And my swing trading, overnight trend following, with about a 2 to 10 to expiration type time horizon. In other words, how long are you in that trade? Built off primarily the daily time frame was far outperformed pretty much anything that I've done this year. And so when we're thinking about the year, please don't think that at the end of the year we look back. I've been looking, and as we have in the Sector Secrets Mastery, we've been looking back, if not every month, every day, because one of the jobs is to make sure that we're recapping on a regular basis every entry, every exit, every day. So we've got a pretty good idea of the cost of the trades that we're in, where we're scaling out, at what point we're skewing risk reward in our favor, and then ultimately if we're seeing winners, and what degree is an average winner compared to an average loser. These are the metrics of success, gang. I'm not going to hedge that in any way, right? Win rate is not the metric of success. Average winner to average loser, then a win rate, right? Because if you're taking 20 or 30% off the table on a winner and you're losing 100% on losers, do you think that even a 60, 70, 80% win rate is actually going to grow an account? And you're starting to calculate in your mind, wow, if I'm taking 20 or 30%, but I'm going 100% or max debit on my losses, am I growing an account? Probably not. Probably not. So these are little things that when we look at sort of the dogma of trading, what's acceptable, and we say, look, there's the metrics of success are very different than the commonly discussed metrics. Home runs, big wins, win rates, those are incomplete conversations. So those are things that at this point in the year would be great to consider. I don't have a problem with looking at short-term swings between now and the end of the year. There might be some opportunities where I'm looking at maybe a 1 to 3, maybe 5-day time horizon. But this time of year, if you want to step away from more that, multiple hour look at the market, maybe look at the markets for 10 to 20 minutes, keep that pulse, and then start to look at your performance for the last month, for the last quarter. Hopefully you're doing this monthly and at least quarterly. And then there's no really big reason to look back at the year and go, how did I do? We want to be far more proactive about kind of course correcting through the year. We have to have a big course correction in Q2. We went from a screaming uptrend to a handful of Fed members talking very hawkishly in April to some of the most difficult action of the year. Another thing that if you're looking back on the year is how are you building your watch list, right? So like I said, come January, I'll be sharing a lot more of what worked in 2024. Doesn't mean that's what's going to work in 2025, gang, right? Recency bias is pretty important. If you're looking at 2024 to 2025, I look at the last handful of months in 2024 because that's the psychology that we're likely carrying in to the new year. We're not carrying Q1 of this year into the new year, right? We're not carrying Q2 of this year into the new year. There's a little bit of a recency bias. And I'd say even December is the most important. So software-wise, I'm not going to advocate any particular software. My favorite is TradesViz. I've been using that for about 2 or 3 years now. But Wingman Tracker is fantastic. TradeMetria, TraderSync, TraderView. There is not a bad piece of trade tracking software out there. They're all amazing. Just find the interface that you like. TraderSync is a gorgeous looking interface. I think trading Wingman Tracker is great for those of you that do a lot of multi-leg type options trading. TradesViz is a gorgeous looking interface. That's what I've been using mainly and mostly, like I said. So whatever it is, why would I say do that instead of, say, an Excel spreadsheet, or even what I do for the recap, which is just a line item of what we bought it at, where we scaled out, all the numbers, right? All of them. Why would I say that a trade tracking software might be a little bit better? Because ultimately what it's going to do, it's going to show you, a lot of times I know that the beginning and the end of the month for me are the least productive. While the middle of the month is usually the best for me. Beginnings of the month are actually the toughest time for me historically. And I can see that by looking at my software. We can look at average hold times. Again, you can look at average wins versus average losses. And those are things that are just really easy to do. So these are the kinds of things that I think about at the end of the year. And again, I think there's a difference between a trader who's comfortable being flat, saying, do I have an edge here? If the answer is no, then why on earth would I put my capital in harm's way? I would continue to be bullish in tech. XLK, XLC, XLY continue to outperform. I would leave semiconductors alone. They had a great early part of the year. They're really underperforming right now. And again, don't let the semiconductor strength of AVGO alone kind of make us think that Taiwan Semi or even NVIDIA are looking all that good. They're frankly not. Amazon and Tesla continue to be great outperformers. Also, I would say Apple would be on that list as well. Google, since the Willow announcement, continues to hold that gap up. So it's looking pretty good. So there are some names that are looking individually. If you look at individual stocks, there are some names that are still looking quite strong. And if there is going to be any kind of performance chase, that window dressing, that's going to be in the we're going to see that in this very end of the year. So that's where I'm sitting right now, looking back at what's working, thinking about what that psychology, macroeconomic expectations are going into the new year, and then remembering that for me, the beginning of the month is usually very difficult as compared to the rest of the month. If I were to separate out the first 3 to 5 trading days, for me, I know that's oftentimes where I'll take losses. Interestingly enough, pretty common. So everyone's going to take losses, by the way. There are people who admit to losses, and there are liars. There's nothing in between, gang. Everyone loses. It's our job to limit the losses, and it's our job to know when we have a tendency to lose an edge. And I know at the beginning of the year, that's oftentimes it. And I only know that because we have software that can really mercilessly and unemotionally look at what we've got. So those are things that we can keep in mind. All right. What else do we have? Oh, yeah, I probably should mention, give me 1 second here. One of the things that we're going to do into January is look back at the year. And, you know, one of the reasons I mentioned the last 6 months as opposed to the first 6 months is the first 3 months of the year, gang, when we had that screaming uptrend where it was pretty easy to trade, to be quite frank. I did 180 and 60%, over 100% in January, 80% in February, and 60% account return growth in March. So, okay, Rob, everyone can trade a straight up market, but I'm happy to share that. But then April was 11.6%. I think I was up 7% or 6% in May, and then June started to get back on track. So it was an interesting 6 months. But in terms of return month upon month, if you're not looking at when the struggles are happening, for example, did my trading system break in April? No. What happened was a screaming uptrend, and go take a look at the chart, right? A screaming uptrend transitioned because the macroeconomic narrative changed. And these are things as we review how we traded in the mastery through 2024. And we'll talk about this a lot in January, gang. So if you're watching Charts and Coffee now, you'll definitely get a lot of this come January. I'll share more specifics on trade results. I'll share more specifics on average trades, losses, and wins. And ultimately, what hopefully we'll have is some really clear footing and a plan for the next year. Not just a plan for the way we can look at trends, but a plan for where that macroeconomic trend, which is going to be a really important part of the new year. Where is that at? Of course, we're going to have a new administration. So there's the uncertainty of that. So all the more reason to have some guidance around how to grow your account, whether that be a small account or whether that be a large account. Would many of you be surprised that I would teach someone with a $7,000 account the same process as a $700,000 account or 70? Would that surprise anyone here? It's the same approach, right? The same approach. In fact, I was watching, they were replaying the Little League baseball, the little kids that play like adults. It's unbelievable. So I was watching that and I'm thinking to myself, do you think they teach those kids a Little League swing? Or they're working on the mechanics just at a pint-sized level and the same mechanics in the major leagues? In fact, if anything, the mechanics of the kids are at that smaller level are better than the mechanics at the adult level, because once they get to the major league, they start getting lazy. They start getting sloppy. They start leaning on a little bit more talent and experience, which isn't a bad thing. But I look at traders who start to grow an account and they get a sloppy swing. And when they were trading, I say a medium-sized account or a smaller account, their swing, their mechanics were really, really good. So how can we abandon those? Or maybe you never got the good mechanics to begin with. And again, those are things I think about at the end of the year. How can we improve our mechanics so that if we have a smaller, medium-sized account, we can continue to trade in the same way? I trade the same way now that I did when I started. The mechanics are the same. So keep that in mind. The mentality of good trading, right? Doesn't matter if you have a small account or a large account. In fact, small accounts and large accounts make some of the same errors. And we'll talk a lot more about that in Charts and Coffee. And maybe you'll see, oh yeah, Rog, it's not that I have the wrong indicators. I'm not building a watch list correctly. I'm not taking trades with proper timing. I'm not position sizing correctly. I have no stop loss or risk management plan. And as we tackle some of those big 5 issues, you're going to say, oh, okay, this is not that difficult to fix. I just had to be aware. So anyways, gang, I wanted to wish everyone a happy New Year's Eve, happy Christmas. Enjoy some time away from the charts. Maybe spend those 10 or 20 minutes keeping the pulse of it. But I will see you all on Thursday for Charts and Coffee. Maybe pick up one of those trading track softwares. Maybe ask Santa for Christmas for some trade tracking software. All right, gang, be good to each other. I'll talk with you on Thursday.